All right, greetings traders. It's time to go ahead and get started here. It's 10:30 a.m. on the west coast of the U.S. where I'm at, but good morning, good afternoon, or good evening, depending on where you're at. But welcome to our live trading room. It's a special session that I'm running as we watch the market reaction to the FOMC Open Market Committee's announcement about interest rates and their forecasts for the economy. Typically, the market has a reaction to that, and it can be kind of fun to watch it, and it can uncover some great trading opportunities. So that's what we're doing here today. So I'm Dean Jenkins of followmetrades.com. I'm the founder, and again, this is our live trading room. Hey, good morning, Martin. And just before we get started, a quick disclaimer that I'm a trader. I am not an investment advisor, financial advisor. So everything that's covered in this room is for education, information purposes only. I'm going to give my take using my analysis tools, my trading methods on the market, look for good trades. If I see a trade setup, I'll call it out. I may even trade it right in front of you with my own, in my own account, with my own money. But whether any individual takes a trade, makes an investment, that's solely their decision, and they assume the risk for that decision. I'm not giving investment or financial advice. Again, I'm demonstrating what I do. All right, hey Ellis. These FOMC, this is a quarterly thing roughly. There's a schedule. I'll see if I can find a website in a little bit where they publish their meeting plans. They're published well in advance. It's about every quarter that they do it, working around holidays and all that kind of stuff. So on the GoToWebinar control panel, if you haven't used it before, I think many of you have been in webinars before, but there's an area where you can type in questions. A couple folks are already typing them in. That's awesome. Make sure you can locate that. So you can. I definitely want to answer your questions and have you make comments. Keep it interactive. Keep it fun. We're going to cover a lot of information. Of course, we're going to watch the market as the announcement comes out and be specifically focused on analyzing what's going on in the market, looking for trades. But I'll share a bunch of other information. And as we get time, if you have charts you'd like to look at, get my opinion on, I'll be happy to do that. We'll bring them up and I'll analyze them using my tools and techniques and give my opinion on those. So make sure you can locate the question window so you can type in your questions and comments and start. Why don't you just type in where you're calling from? We got a little bit of time. We got 25, 28 minutes here before the announcement comes out. So let's just get settled in. But type in where, what city, what state, what country. Often we get people from all different countries. There we go, Walter. Alabama. Sweden for Brit, see? Got Europe on the line. Anacortes. John, you are not far. I'm down here in Olympia right now. Cape Town, South Africa, Mimi. Awesome. Netherlands, Hong Kong, Kansas City. We got an Aussie Kiwi living in San Francisco. Jamaica, West Indies. No way, Ellis. Sweet. So the people on the East Coast who are buried in snow and slush and freezing are a little bit envious of you sitting out there in Jamaica right now, Ellis. New York, yeah, Evan, I know you. Ontario, Sioux City, Iowa. Don, Don is asking if I'm in any trades before the announcement. I'm in my longer term picks. I'm not in any short term picks. I went ahead and flattened all my positions for very short term trading. But we'll talk about some of the longer trades we're in here. Connecticut. Windsor, Connecticut. Yeah, Jack. I thought you were in Vermont, man. I got confused, Jack. Karen's in Ontario. Francine is in Arizona. People are, again, the East Coast folks probably wishing they were in a warm place right now. Some of them, anyway. Dennis is asking, he's in Montreal, and he says, do I have a bias toward the announcement and the result? I don't. I think, yeah, we're only showing the header right now. We're going to show charts in just a few minutes there, Gunter. Puerto Rico, Antonio. Nice. Yeah, Richard, we're going to be looking at the futures markets, which really show us how the market's going to react to the FOMC announcement. I personally trade stocks and options primarily, but we watch the futures markets very closely. Yeah, you're welcome. So I'll go ahead and show my charts, get you familiar with the setup that we're going to be using here. So there I'm showing my futures charts at this moment. So what we've got, I'm going to track the S&P 500 futures contract, the E-mini, on the right-hand side of the screen. So on the top, I've got a 10-minute chart, which is, a little bit longer for intraday, and then on the bottom, I've got a 2-minute chart. So watching short-term moves really quickly there. So on the right is the E-mini, 10-minute, 2-minute. In the middle, I've got the gold futures contract, again, 10-minute, 2-minute, and then on the left, I've got the oil futures, 10-minute, 2-minute. Gunter, yeah, we can speculate about all that kind of stuff, right? Terry, do I think the sequester holiday expiring today will cause market volatility? It hasn't been in the news. In times past, the sequester and fiscal cliff, and if we don't get an agreement, they're going to shut down the government. That stuff has caused quite a bit of market volatility, but we're just not hearing that in the news right now. So I think all eyes are really focused on the Fed. That's the big news everybody's waiting for right now. So there was a question just a few minutes ago about my bias in the market. So let me give you my bias in the market here real quick. Let me pull up, I'm going to pull up the Dow. And again, we got a little bit of time before the announcement comes out, so we'll have a little bit of fun here. So I'm pulling up a weekly chart on the Dow right now, and then I'll project that. There we go. Switch screens. Al, does Trump care cause disruptions in pharma stocks? You know what? We're long some pharma stocks, and we're long the pharma ETF, and it's doing pretty well. It's doing pretty well. Steve asked if I sell an indicator package. I do not sell an indicator package, Steve. I use primarily free indicators from I use TradeStation, but there's stuff that's available. And I use some commercial indicators from Traders Coach. What I do, I have a stock picking service. So I pick stocks, winning stocks, trades, and I sell a subscription where you can get advance notice of my trades and follow along in my trades with me. And I run a live trading room in the mornings, and I sell some courses on my trading methods. I sell a Master Traders course for my analysis method, a options basics course, and a Ichimoku Cloud course. So you can see on my charts I've got Ichimoku Cloud. I use that, I combine that with Elliott Wave for a pretty good. Yeah, the 1B, 2B, those are part of the Traders Coach. It's called the Art Applied Reality, as well as the Pyramids. And they're helpful in my trading. So here's the Dow on a weekly chart. And if you were in the market, you remember back in 07, 08, there was a pretty good size correction. So no surprise, no news to any of you traders. We've been in a bull market for 8 years, right? We've been in a very long bull market. And so what we know is if we take this, if we put this on a monthly chart for just a minute, we know that all bull markets end, right? And afterwards, here's a monthly chart of the Dow, right? There was the dot-com run up, the dot-com crash, the next bull market, then the financial crisis collapse, and now we've been in a very long, wonderful bull market for 8 years. And what we know is all bull markets correct, right? All bull markets correct. They have for as long as there's been a stock market. So we clearly haven't started a correction yet. You can look at the chart here, and any analysis method you might bring to bear would tell you that we're in a bull market and it's still going up. The question is, how much higher will it go? And I don't know. I don't have a prediction on how high it will go, but I do have a prediction that at someday it will correct. Right? History tells us that. And the good thing is, we get an advance notice of that using some analysis techniques. So if we look back here at the, I use Dow theory in conjunction with Elliott wave Ichimoku cloud, right? Dow theory tells us that, you know, this uptrends are just a series of higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, blah, 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 and we're still doing it, right? A downtrend is a series of lower lows, lower highs, lower lows, lower highs. And we can get a pretty good confidence that a trend has changed and turned when, after you've had a series of higher highs, higher lows, it turns around and starts putting in lower lows, lower highs, new lows. And so we'll get some advance notice when this market ends. It will give us some clear signals, and when it does, we're going to be trading to the short side. Meanwhile, we're trading to the long side. Primarily, we're going with the trend, right? Trend's your friend. You want to, if you're sailing a boat, you want to be going with the current. So we're trading to the long side right now. We're being careful, watching for indications that it would turn. When it does, we'll be taking shorts, and we're already taking some shorts in some markets and in some sectors. One thing you will notice about corrections is they happen faster and more dramatically than the moves up, right? The saying is the market takes the stairs up and the elevator down. So when it does start, we're going to be participating. We're going to try and jump on that elevator and ride it down for some great profit. The option training, the list price for the options training course, it's 6 modules. Each module has a downloadable PDF and a training video, and then there's some live trading videos where we actually are trading options and doing order placement and all that kind of stuff. So there's a tremendous amount of material. I teach a very simple approach to options. A lot of people like winged creatures, I call it, you know, iron condors and butterflies and all this kind of stuff. You know, I'm a swing trader, a trend trader, and so I analyze charts and find a direction for the market, and then I trade that direction. And for me, the lowest risk, highest profitable option strategy to trade a swing or a trend is to go long puts or go long calls. So I don't sell any contracts. I only go long. And, you know, in a downtrend I go long the puts, and in an uptrend I go long the calls. But I teach a very simple course on, you know, how that works, how to manage risk, how to pick the absolute best contract for a trade. So the list price of that course is $497, and for participants here, you guys are already on my email list. You're already, you know, participating here. It's $247, 50% off. So I'll get a link to that pretty soon. I didn't know anybody was going to ask about it, but be happy to get a link with that discount, and I'll put it up here in a minute. All right. Meanwhile, so my bias on the market, coming back to the original question, I trade the realities of the market, right? Again, I'm expecting a correction at some point, but we're not in it yet, right? So I certainly have an opinion about what the market should do given economic news and all that stuff, but I don't trade based on what I think the market should do. I trade based on what the market is actually doing, right? And that's over the years, having developed a trading method and a set of rules and you know, the discipline to follow it. It's reality-based trading. We trade based on the signals on the chart, right? Not what we think it should do and try and jump in, but what it's actually doing. And that's served me really, really well. We've had nice profit for several years now. Okay. So I think the market's going to correct at some point, but I'm not trading that yet because it hasn't proven it. That's not the reality yet. Now, you know, will the FOMC announcement today be a precipitating event that triggers the beginning of a correction? Don't know. After it happens, we'll have clear evidence and we'll have plenty of time to trade once the correction begins. But whatever the news is, it'll probably cause at least a short-term movement in the market that we can capitalize on and trade with. So what do you guys think? I'm going to kick off a poll here. I'm going to kick off a poll, and you guys can vote on what you think the market is going to do. So I'm going to get this launched real quick here. Just Here we go. I got it ready, I think. So this is for really will the Fed raise rates at this meeting? So I got a poll going. There you go. We'll leave that open. So go ahead and vote. See what you think they're going to do for March at this meeting here, and then I'll share the results. Like lots of people are voting. That's awesome. So just keep clicking away on that, and I'll give it a few more minutes, and then I will share the results. That'll be fun. Gunter's comment, the uncluttered mind of a child. I hope that's a compliment. I do like to keep things simple. I don't trade Forex, Don. I do participate in currency trades, but I use ETFs. I don't trade Forex. I just, I found myself early in my trading career getting scattered across futures, Forex, stocks, options, and I decided to focus in and keep it simple. So I watch Forex, I watch futures, but I place my trades on stocks and ETFs primarily using option contracts. Okay, I think the answers coming in are slowing down. Nice, a lot of people voted. Thank you. That makes it fun. So I'm going to close that, and now I'm going to share the result. Here we go. Okay, 84% of the people who voted said quarter point raise. 8% said bigger, and 8% said nothing. Do nothing. Stand pat. Nice. A couple of comments coming in here. Yeah, I don't see an ABC forming, John, right? I think we're still in Elliott terms in wave 3 right now. Drew says 4 more hikes instead of 3, more hawkish than expected. Scott's getting very specific. Nice. Quarter point raise, 0 to quarter, then the market's going to work its way toward 22,000 and then correct. I'm ready for that correction. Jarius, how much capital do I recommend for starting out in option trading? If you follow good risk control, which I teach, right, you could start off with a couple thousand. Now that's going to keep you out of some contracts. Apple contracts are $1,000 each. And you can't trade those with a couple $1,000 account. But if you had a few $1,000s, you can trade some smaller ones where you're paying $100, $200 per contract. Because what I teach is we only place the amount, we only put the amount at risk in a trade that we can afford to lose. That's an important part of trading, is to use risk management and to recognize that every trade can fail, and we have to be financially and emotionally prepared for that loss to happen and for it not to be a major setback. Right? We can take a few losses if we're using good risk control and move on. And if we have good trading statistics, right, we're going to win more than we lose, and the winners are bigger than the losers. We'll be profitable. But So you could trade, I'd say, 4,000 or 5,000 probably the minimum to get in to trade options. Yeah. Al, what steps am I taking to protect my portfolio from the coming downtrend? It's just exactly what I said, risk control. So every trade I'm in, I've already calculated the maximum amount that I would lose if it hits my stop, right? And that's a tolerable amount of loss, right? And I'm also going both ways. I'm not trading the indexes right now because they are too mature, not on long term, right? We're taking some short-term trades on the indexes. But long term, I'm in specific sectors that really aren't moving with the index. We're long and we're short together. Yeah, my running win rate is 65%, Karina. 65% of my trades win, but a more important statistic is that my winners are about twice the size of my losers. So when you combine those statistics, that for a losing trade, if a losing trade loses $100, then my winning trade wins $200, right? And I win about 65% of the time, so that makes for some powerful profit. That it's called the payout ratio, and the payout ratio is actually a more powerful statistic for your long-term profitability than your actual win rate. You want your win rate as high as possible, of course. In terms of my ongoing profitability, I do have I'll bring up my home page and you can go there. We just launched a new version of my website, and it was really painful to transfer brokers, or not brokers. It was really painful to transfer web hosts, but we finally got it done. We're still getting some broken links fixed. But there's my home page, and there's my year-on-year profitability, and that's actually been externally verified that I'm actually doing that. So you can go to my homepage, followmetrades.com, and check that out. Oh, thanks, Diana. You like the new look? A little bit cleaner. Trying to get a little clearer message. Like I said, it took an inordinate amount of time to get the web host, the one to let go of it, the other one to receive it and make it all work. And now there's some broken links we got to spend this afternoon fixing, but it's getting there. Thank you. Thank you very much. The new feature on the website looks pretty cool. We got this scrolling marquee which shows some of the current trades, the portfolio leaders, trades we're actually in right now that are doing pretty well. So that's fun. So somebody had asked about the options course. So I did put a link in the chat area for that. So anybody's interested in the 50% discount on the stock options basics course, there is a link. Hey, let's get back to the futures market and be ready for the announcement when it comes out in about 7 minutes. And let's see. What we're going to do is see how the market reacts to the message, and I'll look at the news feed and see what the message is, but I care more about what the market does. I don't really care what the news is. I care how the market participants respond to that news. What's the reality, right? It's all, the whole story's there on the chart, right? So we don't really need to know what they say other than from curiosity. We just need to know what the market's doing about it. Looks like we still got folks tuning in here. Welcome. Glad to have you here. So we did a survey. If you just joined in, we did a survey a few minutes ago, and 84% of the people we had a lot of people here on the call, and 84% of them think we're going to see a quarter-point increase in this announcement. And then some folks think more. About 8% think more, and about 8% think stand pat or nothing. We will know the answer in a few moments. Pretty encouraging. We got people calling in from all over the world, from Jamaica to Europe to the East Coast, Midwest, and West Coast of the U.S. Got somebody calling in from my neck of the woods here in I'm in the Seattle area, just south of Seattle. We didn't get any snow right now like the East Coast did, but it is rainy and nasty. Very much a typical Northwest winter day. Hey, you're welcome, Mukesh. Yeah, all the letters and triangles. Uh, so the primary indicators I use for my trading, I use a combination of Elliott wave and Ichimoku cloud. I combine those two systems, and when they agree, the results are really, really powerful for high probability trades. But I use the applied reality trading system as well, which is these pyramids. These pyramids are, in an uptrend, price moves in higher highs, higher lows, higher highs, higher lows. The pyramids indicate special higher high, higher low sequences, a very important support level when the ratio of the up leg is greater than the ratio of the momentum of the down leg. That's a specific algorithm that Bennett McDowell developed. This is software sold by traderscoach.com. And these 1B, 2Bs are key reversal areas where, again, his proprietary algorithm is met to indicate a key reversal either up or down. So I use this in conjunction with Elliott Wave, Ichimoku Cloud to help me manage the trade. I use the pyramids for initial stop placement and new stop trade placement, and for trend confirmation. This oscillator is really helpful for trend confirmation and helping get an accurate wave count with Elliott Wave. So that's what's going on with those indicators. 90% probability, Madhu's saying, for 90% probability, according to bookmakers, I guess, that they're going to raise the rates this time. It was about 3 weeks ago that it was only at 20%. It's changed pretty dramatically. Hey, you're welcome, Mukesh. I'm using TradeStation. That's my trading platform. And if you're a TradeStation user, it's pretty nice. They got this free news feed from Bazinga. And so we'll be able to watch here. It'll come out just about real time as the data comes out. But again, it'll be interesting to see what the Fed says, but we're more interested in what the traders say about what the Fed said, what the charts do. So we'll be paying close attention to that. And oil probably isn't as sensitive to the Fed as gold and the ES. So the E-mini, SP 500 futures, and gold are very sensitive. And if they come out and say nothing's changed, right? These will both go crazy. And if they come out with new information, they'll both go crazy. So it's unusual that these instruments do absolutely nothing when the minutes come out. It's a big deal. So. And they'll look at the way their hair's parted, and which hand are they holding the pen in, and all these Fed watchers. I can't believe how many people are paid to just watch the Fed and write about it. There's a whole industry around watching the Fed. And Matt is agreeing with me that oil isn't nearly as affected. Oil's been surprising. If you watched the end of last week, pretty big drop in oil. Some folks are forecasting it down to $40 a barrel. I don't see that yet on the chart, but we're watching it. Right now, for me, oil is not tradable, which is unfortunate because it's really fun to trade. Certainly, there's day trades there, but I don't day trade. I do short-term trading, which is like 1 day to 4 or 5 days. I'm in shorter-term trades like that, and then I'm in longer-term stock trades, stock and option trades. But I don't trade intraday much. So on the longer term, trading oil right now is untradeable, which is too bad. What is Al's asking? How much does the Fed president get paid yearly? I don't know. It's a government position, so they probably probably it's a comfortable salary, but nobody's getting rich off it, which is strange because every word they speak, when they come out and say something, can literally cause trillions of dollar change in the market. Okay, here we go. There must be some information out, because we're seeing some movement. So what do they say? Wow, look at gold. So one of the things we see typically, and what a pattern I look for in trading shorter term, is a big impulsive move initially, and then, boy, look at it on the 2-minute chart. That's the price bar, isn't it? A big initial move, a Fibonacci retracement from that move, and then the next move up. So let's see if that actually happens and if we get something tradable. Look what is happening to the ES too. That's a pretty big move from the time of the announcement at 2370 up to, it spiked up to 76. That's pretty big for a 2-minute price bar, 6-point move, huh? Up a quarter point, says Jack. And that's for March, right? Yeah, I see that. Okay. So that was pretty much built in, right? People were expecting that, like Madhu said, about a 90% probability. In a little bit, they're going to come out with their statement. Here's the full statement, blah, blah, blah. I can't read this while I'm watching the charts. They see gradual raise in interest rates are expected, blah, blah. Okay. Cool. Well, we weren't disappointed, right? There was a dramatic move. Now the question is there something to trade? Let's watch this for a handful of price bars. Let's get, trying to catch that move, I think, is a bit of a sucker's game, right? You can get lucky every once in a while, but you can also get it handed to you when the market is moving like that, particularly if you're trading intraday, you're trading futures. If it went the other way, you were expecting a drop, say, and you had a stop, you can get big slippage and much bigger losses than you were planning. So I think trying to catch that move is a bit of a sucker's game. But, you can get lucky, but lucky is not a strategy. And but we can see, give it a little bit of time. If we get this impulsive move, we get a pullback, a correction to it, and then evidence of it starting again, then we can get a good trade. So we'll watch that and see if we get something forming up for us here. John says, what will I buy if there's a pullback? Doesn't look like a pullback now, does it? I like, for a bearish S&P 500, I like SPSX, which is a bear 3X. And I think there is a bull pair for that one. It's an ETF. It's a leveraged ETF. I also like, when the market is heading down dramatically, I like trading some of the VIX ETFs like TVIX, leveraged, 2X VIX instruments for short-term trading. For longer term, I like individual stocks and ETFs. Yeah, SPY's not bad either, William. SPY's not a bad way to trade. It's a really deep market. It's not leveraged for like you kind of want for short-term trading, but it's good. And it's got a huge option market. You can do real well with SPYs for sure. Here, I'll show you guys a trade that we are in that's popping right now. This is from my stock and option pick service. So we're very early in this trade, but this is XPH. It's a pharmaceutical. It's the Spider S&P pharmaceutical ETF. So we got into this at 41.35. It's up 1.5 points right now. So we're in a little bit of profit. We just got in this trade. I got an initial stop down here, 39.65, and I got a target price on this using my analysis methods. What is that target price? It is 49.83. It's this dashed green line. So I annotate my charts this way. This blue line is the entry, the red line is my current stop, and the green line is my target. And you can see I've got Fibonacci retracement lines. That's what these colored lines are. And so we're just looking for price to get up in the middle of a Fibonacci retracement zone. And that's a retracement from the big hit that pharmaceuticals took last year. So big move down, and now clear evidence of a retracement starting up to this target zone. So we're in that. It's early. Still really good trades on that one. So that's one we really like right now. XPH. Of course, when I trade that, I publish this information to my subscribers. I give them the stop, the entry, the target ahead of time before we get in, and then I give them an option contract that they can trade it with. Either buy the shares outright, or I give the details on the option contract. That's a really nice trade right there. So we'll just look at this while we're waiting for the market to just settle a little bit. Now, it didn't really retrace, did it? It's just heading straight up. One of the things I hate to do, and I've learned the hard way, is it can be really tempting to just jump into a trend like this. Like, wow, it's moving up, let's go long. And sometimes that works, sometimes it doesn't. But impulsive moves, most of the time, end up correcting. They end up correcting to some degree, even if they're going to continue up. What you don't want to do is jump in right now and then have that correction start. I like to wait for a correction and then catch it when it turns and heads back up again. That's a much more highly probable trade. So I'm just going to keep watching this and see if we do get a bit of a pullback and then a good entry. And it'll take a handful of minutes here. It's a 2-minute chart, so it takes a little while to paint that out, but we got time. So here I showed you, this is a trade that I think if someone was interested in it, you could take right now. And the reason I say you could take it right now is because the way I calculate that, I look at the reward to risk on the trade. So it's currently at 41.95. The stop's down here at this red line. You just look at the distance from the stop to the target, the stop to the entry, and then the entry to the target. And you go, oh, this is a lot bigger. There's way more potential reward than there is risk. So that one's still a good trade. I love Elliott Wave and Ichimoku Cloud together. Here's one we took. We're still in this trade, but don't get in this. This is almost over. It's too late. But this was just using a real simple, repeatable Elliott Wave approach. You know, some people get all complicated. They got 27 patterns to memorize. I only use 3 patterns. Right? I'm either going to trade a wave 3, I'm going to trade a wave 4, I'm going to trade a wave 5. This is a wave 5 trade because we had a 3, we had a 4. Wave 5 proved. The reality was wave 5 was starting using my analysis tools. We took an entry on this at 67, and we're still in it up here at 75. And the target zone we had defined, you can see there's my target line, was Fibonacci extension level 61.8 to 100%, went right into the target zone. How sweet is that? We take profit along the way, we trail our stop, but we're in really, really nice profit here on MO. So that's kind of how the system works. But you know, that idea that I was talking about, you know, every impulsive move just about is followed by a correction. So we see that on these longer term charts. There's an impulsive move, there's a correction, there's the next impulsive move. So that's kind of what we're looking for on this shorter term. And here on ES, it's already starting, right? There's the impulsive move starting to correct. So let's measure where we would really ideally like to see that go to. And we would like to see a Fibonacci retracement level down into these blue lines, and then to see it turn up, and we would try and catch that next one up. That makes sense? We're looking for it to retrace down into those Fibonacci retracement levels. All right, any other questions? It's going to take a little time for that to play out, so we'll just keep watching. I'm going to keep that screen full screen there. While we're waiting, if anybody has a stock symbol that they would like me to look at and offer my analysis on, I'll be happy to do that. Just type it in. Oh, here they come. Yeah, QQQ, John. It's, you know, that's an index. It's a NASDAQ index, and it's just like the S&P and the Dow. Very, very mature part of the trend right now. So on a long-term time frame like this, I would not be trying to go long on it. Could it go higher? Sure, it could. But we don't really know. We can't project a target zone. We don't know when that trend is going to end or turn around. So I'm staying away from it. It's okay to trade this one on short-term trades, like I'll be looking to try and catch a pullback at some point, right? But again, I don't really want to go long on it right now. Let's look at TGH for John. I don't think I've seen that one before, so who knows, you might just give me a great trading idea. And this may be a good trade, in fact. Let me just check it out. Where did this downtrend start? Started right there. So this would be a wave 4 trade. This is big move down. You know, Elliott wave really is easy. All you're looking for is a big dramatic, you know, what's the biggest move on the page? Well, right there, right? That's clearly an impulsive move down. And now we know most trends, almost all trends, correct at some point. It started here, but it didn't. Now we see a corrective trend beginning. So we expect it to go into this Fibonacci retracement area between 38.2 and 61.8. So it's not too bad. The trouble with this trade right now is sometimes they fall short. So 70% of wave 4s enter this zone. 15% fall short, 15% go a little over. So it may be done. It may be done, or it could go up. But if it went up, the profit potential here isn't very good, right? We'd probably have a stop down here. So we'd have more risk than reward. So it was worth analyzing, but there's not really a good trade there for me. Now, if it does end up turning down, if that was wave 4 and it's going to head down, there may be a short trade coming on this one. But what I like to see it do is prove that it's heading down with lower lows, lower highs, lower lows, lower highs, and get down underneath the Ichimoku cloud. And so if it did that, then there might be a short opportunity. And the short target on this, it hasn't proven it yet. So, but if that was the top of 4, then that short would look like the short target zone would be down pretty low here. And when it shows it's negative, of course, you can't buy into that. So probably the target would be at the previous low, which is kind of a support level. So the target on this would be at about 669. And by the time it breaks the cloud, that's not going to be very good. So not really anything happening there on that trade for me, unfortunately, but it was worth analyzing. Thanks for typing that one in. So X, US Steel, let's look at X. X is a very tradable instrument a lot of the time. So it's a lot of fun. So X is in a bullish impulsive wave right now. And we have to reset the lines from the last time we looked at it. So we're looking, it's in a bullish trend, but it looks like it may be wanting to correct. We got a nice lower low, lower high, new low. It's getting ready to break down through the cloud. So if it does that, we got a target zone down here between 28.39 and what's that other value? 19. It's like 19.98, 20 bucks. So into these areas, it's got to finish proving it. One more low, break through the cloud. We might have a nice target zone down here on X. So that's worth watching. I put that on what I call a watch list. I would set an alert. So if price does break down through the cloud, say it gets down, takes out this low. So at about 34.22, if it gets down to that, I'd like to get an alert and then go look at it again and maybe take a short trade on X. Oracle for Terry. While we're doing that, let's go peek and see what's happening with ES. So, okay, ES did, remember I said on the other chart, 30% of, or 70% of wave 4s make it down to the retracement area, 15% fall short, 15% go over a little bit. So this got really, really close. So that actually might, on a 2-minute chart, meet my criteria for a long trade and on the ES. So if I were to take this ES trade, I would put my stop right here under that low, one tick under that low, and make sure it puts in a new high. I wouldn't go long on it yet. I would wait, right? But if it were to put in a new high, right? If there's gonna be a real trend here, it'll continue and be worthwhile. Okay, so there would be a new high entry right there as it puts in a new high. If it comes down and hits this stop, right, then we got to reevaluate it and see if it's in here and reset these lines, okay? That's why I like to see it prove itself and go up and put in a new high, but let's watch that for a minute. Uh, Moss is asking how much money, what kind of account size would you need to be following my signals? I recommend 10,000. I recommend $10,000 account if you're going to follow my my stock picks. That way, you're able to earn enough to grow your account and cover the subscription fee. Now, there's a cheaper thing you can do with a smaller account, and that's my live trading room. Right, that's a cheaper thing. It's cheaper subscription value, and we still do call out good trades like we're doing right here in this room. We identify good trades. So if you're available in the morning, right at the market open, the live trading room is a good option too. Let me hit you with a link for the live trading room real quick since you're asking about it here. You were asking about the stock picks, but for some folks, so the live trading room, we're open Monday through Thursday. We start at 6:15 Pacific, which is 9:15 Eastern, and we go till 7:45 Pacific, 10:45 Eastern. So we're there an hour and a half. We watch the market open, we look for a direction, and we go find good trades. And I call them out and I track them. And so here's the trades that we are in. There's a list of trades that we're in. We review every day in the live trading room. So, we got a handful. How many trades are we tracking right now? 12. 12 trades that I've identified lately that are still open. And some of those are, here's one we got in. We found in the trading rooms, outstanding IMGN. That was a great find. Let me bring that chart up. So that spreadsheet that I showed is posted in, people that subscribe can see it on the website. Go check it out, even if you can't be in the room. So we got into IMGN, Immunogen, at 273, sitting up here at 366. We got a target zone up up above $8, so pretty nice. Those are the kind of trades we're looking for and calling out. Yeah, the difference between the trading room. So the trading room is, we're there an hour and a half, Monday through Thursday, watching the markets real time, and I'm calling out trades, and I give you information like that spreadsheet I just showed you. But it's really, if something happens between, rooms or whatever, you're on your own to manage the trade. The stock pick service is for longer term picks and short term. I offer short term, long term, and I give you updates step by step on the trade. So I'm with you. Those are the trades I'm taking with my own money, and I give you updates, either email or a text alert, whichever you want, on when we're going to take profit. When we get in, what the initial trade parameters are, and then when we're taking profit, where we're moving our stop to, and where we're closing the trade at. Yeah, Don, with a 10K account, what can you expect to make per week? I wouldn't measure it per week. I wouldn't expect to make a weekly income, right? The stock pick service, the long-term picks, we're in them an average of 4 to 6 weeks. Okay, so when they win big, but you will go through periods where maybe the market's kind of flat. January, February, the market didn't do much, and so it's really hard to trend trade and expect income. But in terms of a annual return, here's what we've been doing over the last 4 years. You can see it on my homepage, right? It all depends on market conditions. When the market's in a screaming bull market heading up, it's a lot easier, right? Last year, the market was up and down, so a little harder. But we're still booking really, really solid profit, but that's not on a weekly basis. So we want to set the expectations correctly. No, Moss, you don't have to know how to trade options. You can, I give the information. You can just buy the shares, sell the shares short. I also give the information if you would choose to trade it with an option contract. And again, it's really simple. I give, if we're going long, I give a call contract. If we're going short, I give a put. Yeah, you can get the same results, Karen, no, we're out of SPSX. In the trading room this morning, I said if S&P was heading up, we were gonna that I was going to be out of the position, whether it was up or down, before the announcement, unless we were way deep in profit. So I did go ahead and close that at break even, 1 or 2 ticks below it, I think, actually. Yeah, Rick, temporarily mothballed, not indefinitely, but temporarily. I'm focused on the current short-term, long-term stock and options picks. They're doing well. I've only got so much bandwidth, so still interested in it, but can only do so much. So I did post a link if you're interested in the live trading room. It's $39 a month, which is pretty good value, right? For provide education, market analysis, and we call out trades just about every day and give you access to those. So if you're interested, that link is there. Folks are asking about the stock pick service as well. You can try the stock pick service for 30 days for $39. See if it's a go for you, if it makes sense. And then it's $97 a month, which is a discount. The list price on the website is $127 a month. So I just put a link up. You can try it for a month for $39, and then if you want to stay, it's $97 per month. So, for folks, if you got, say, at least a $10,000 account, the historic results would pay for the subscription and give you some nice gains. No guarantees for the future, right? But so far, we've used this method for several years, and it's been pretty good. So we're watching the S&P 500, the E-mini here. Look how it's consolidating. It's even forming into a bit of a wedge right now. So we were looking for a retracement. We had an initial move up. We wanted to see a retracement. We got one, enough. So if it heads up and it breaks out of this wedge up to this light blue line, that's going to be a long trade. If it continues down, we got to reset things. But we're watching to see if that would generate an entry signal right now. John made the comment, gold looks like the winner so far. Yeah, it does. Look, it didn't really retrace much at all, did it? I'm pretty intrigued by gold. Let me bring up a daily chart. I've been watching this. We traded gold earlier this year with some phenomenal success, and we use GDX. We use the gold miners ETF. But let's take a look at the gold futures contract here on a daily chart. And here's what I've been saying. We saw that gold found a bottom at the end of last year, early part of this year, and we took several long trades, shorter term long trades through this move up. And we knew it was going to retrace at some point, and it did. It retraced. Now, that's a small wave 3 right there, and that's a perfect wave 4. See how it made it into these blue lines, this Fibonacci retracement? And we got a nice move up starting. We've been waiting for this. So if it gets above this cloud, we're going to be taking some more long trades, and we expect gold to move up to 1282 to 1334, and there'll be some great trades along the way there. With gold, you can just trade GLD, but I like GDX a lot too. And there's some leveraged ETFs out there for gold, Nugget or Dust. Some of those are inverse, but there's some leveraged gold ETFs out there, 2X and 3X. But we took several GDX trades earlier this year in the live trading room and for the pick service. Let me try and catch up on the questions here. Karina, what small account, what can you expect in the option pick service? Yeah, so it's stock and options. I pick based on a chart, right? And then I publish the trade parameters where you could trade it with shares or with options, either way. And I publish the risk control guidelines that I'm using too. So, you know, if you look at the annual historical results, right, we're booking an average of 30-35% per year, you know, some above, some below, right? So it depends on what the market, right? We can't, we trade according to what the market's doing. So you can kind of extrapolate that with, you know, if you use 30-35% as an annual average return, right, minus the subscription fees, you could get a sense of over time what to expect, right? Billy says, what criteria do I use to select stocks? I just want winners, man. I just want winners. Here's a pick I was showing earlier. This is MO. So my criteria, I use a combination of Elliott Wave and Ichimoku Cloud. And so this one was a Wave 5 trade. So my criteria was, got to see a Wave 3, got to see a Wave 4, and we got to see proof that Wave 5 is starting. I've got to have a good return. You know, we initially started with our stop down here, right? So it's got to have a good return to reward ratio on it. It's got to have a high probability of making it. So, you know, I use a strict risk control formula. So if it hits the stop, the most I'm going to lose in my account is 2% of my account. I use a formula to drive my position size, how many shares I'm going to buy, based on where the stop and the entry are, right? And the potential win's got to be much bigger on the trade than the potential loss. I use a simple calculator for that, and I provide that calculator to the subscribers and teach, you know, give you some instruction material on how to do that. So that's a Wave 5 trade. That's my criteria. Is it's got to have, you know, high probability of winning. It's got to meet one of my 3 setups that I look for, and it's got to have a high return to reward ratio on it. Yeah, Moss, that's a discount, right? My website says 127. The link I gave you, you get a trial for 39 bucks for the first month, and then it's 97, a discounted rate afterwards. Because you're here, I'm giving you a special deal, man. Terry, do I mind if students use option debit spreads to reduce costs? Hey, you can do whatever you want, right? I'm calling out trend and swing trades based on underlying charts, right? It's your business how you trade it, right? I'm sharing what I'm doing, right, and what's working for me. But, you know, obviously you can do whatever you want. And if you believe in the trends, right, which, you know, about 65% of the time we're right, and if we're wrong, we have very controlled risk, very controlled loss, very small loss. So you can trade that however you want. And lots of people who subscribe trade different ways, and they like, you know, bull credit spreads and, you know, whatever. Or they maybe get out earlier, they don't stay as long as I do, or stay in later, right? So, you know, what I'm doing, it can be a starting place, and you can use that however it makes sense to you. Moss, well, that's awesome, man. Rocket. Moss says he's going to sign up. Yeah, you know, you get a month for 39 bucks. You can then have plenty of time to figure out if it's a good fit for you. John, the target on XPH. Let's bring it back here. Target on XPH is this green line, which is 49.83. 49.83. Yes, I teach. I have a master traders course, Moss, where I teach people how to analyze charts and my entire trading method. It's a 6-week course, and we're like into week 3 right now, but I run that for 6 weeks. I take a week or 2 break, and then I do it again. And so if you watch, email that out, and when we're going to start the next session. So you're definitely welcome to check that out on the next go around. Well, cheers to you, John. Yeah, so let's look back at the futures and see what's happening here. So gold's just marching, isn't it? Starting to consolidate a little bit. So ES is pulling back just a little bit, so we may have to reset this trade. That's why I didn't want to just jump in long. Remember I said, you know, just because it's running, don't try and jump in a trend, let it correct, and then prove it's going to do it again. Be a little patient. So it's consolidating right now. Let's see what it does from here. No, Rick, I will. I just haven't had time to check it out. Bennett and I talked about that. He is going to, I'll get the trade confirmer stuff and check it out and see about incorporating it. Jerry is interested in the Ichimoku Cloud course. Could you use it to trade Forex? Absolutely. Absolutely. Give me a pair that you're interested in, Jerry, and we'll bring it up and I'll show you how you could use it. Type in the exact pair you want to look at and what time frame. And Julian, yeah, absolutely. There'll be a link. I'm recording this and I will send a link out to everyone. Glad you think it's good stuff, man. I try hard. All right, Joyce, let's look at it. Let's have a look at get the right screen back up here. Jarius would like to look at USD JPY. I know that pair on a daily chart a while back. It was super beaten down, and look at this move, right? And we could see that coming. So just, I know you want to look at 30-minute, but if we just look here on a daily chart for a minute, this move, what we're looking for is a big dramatic move down, and then we're looking for it to break up through the cloud and prove that the next trend, the correction to that impulsive move is starting. And boy, we got it. And it called this trend, right? It projected that it was going to go between these blue lines, and it went a little bit above. So that's how you can use it, right? And by the way, on this right now, it looks like it's heading down. So we had a wave 4. This is wave 3, wave 4. Looks like we got 5 down coming, and look how it's getting ready to break through the cloud right now. And so this could be a pretty good down move coming on USD JPY on a daily chart. It isn't confirmed yet. We want to see it break down through the cloud. Probably the high probability area to see this confirmed would be to take out this low. If it takes out that low, we got a really nice short down to 102 to 92 on the daily chart. Let's look on the 60-minute. Okay, 60 minutes probably going to be showing a bearish trade right now as well. Let the data load. I do use proprietary settings, so the Ichimoku indicator, if you notice, it looks a little different maybe than if you're using it on your platform. I've back-tested proprietary settings that correspond to Elliott wave and Fibonacci levels. Let's get this squared away here. So on 30-minute, yeah, there we go. Kind of the same picture. It's bearish for sure. We're down under the cloud, and this current move though may already be there. Yeah, so it's not a good short on the 30-minute chart. It is on the daily. You got more time, but it's already in the target zone here on the 30 right now. So it'll probably move down and then back up and start another sequence down. Yeah, so Jarius, there you go. I did like that setup on the daily chart. That was really, really nice. It's really close. If you're interested in the Ichimoku course, let me go snag a link for you real quick. Again, I didn't know anybody was going to ask about that. I'll get it for you. It's easy enough to do. It's in these sessions I give discounts, right? And so the Ichimoku course is listed at $149. It's a single module, really good training. There's several. There's a PDF explains the whole thing, and there's several video recordings and live trading examples. Here we go. So I got a discount. You can get the course for 99 bucks. Pretty good deal. Feedback from people who have taken it's phenomenal. They really like the course, found it really, really valuable. So I put that into the chat area, there's a link to sign up for the Ichimoku course for 99 bucks. Welcome to check that out. A breakout trade, if you can catch it, right? If you can catch a good breakout, and we talk about in the course how to spot, you know, they typically break out at channels, right? So if you can catch one, that's good. Mostly we're going to find corrective wave or impulsive wave trades, and those are really good too. Don, what do I think of Euro USD? Let's look. Daily time frame or different? Different there, Don. Yeah, Karen, absolutely. If you take the Ichimoku Cloud, I give you the proprietary settings. Yes, absolutely. So Euro USD, this is good. This is actually a pretty nice setup. So clearly in a downtrend, it was. I said that yesterday. I said, are you from Canada? I think I just hung around too many of them. So here's the absolute beginning of this downtrend on this time frame right there. So what we can do is measure just what's the retracement look like from the absolute top down to the absolute bottom. When it retraces, where would it retrace to? And here's the retracement zone on the Euro USD. And what we have here is some very early evidence that that correction is beginning. Down here, it's put in a nice bottom, it's put in a higher high, a higher low, starting to put in new highs. You can see the Ichimoku cloud is getting really, really thin. That's typically when price breaks through. You see where price breaks through the cloud is at very, very thin points. So we see the setup beginning for the price to break through the cloud. Now it hasn't quite done it. We like to see our price oscillator go positive. We like to see a really clear break. And you got time on this one if you're trading this on a daily chart, right? If this thing breaks, it looks like it's going to go clear up into this zone here. So it's worth waiting, and then you would want to put a stop down here and then trail your stop up as new higher highs, higher lows are put in. So that one looks pretty good there, Don, on a daily chart. If you're, I would just wait and let it get a really good break above the cloud there, and then that'd be a nice long trade on the Euro US dollar. So what are the futures doing here? See how ES, that's why we didn't go long. That's why we didn't want to try and go long in the first impulsive move, and we waited for a new high before trying to go long. Now it's clearly retraced down into the zone. Now we want to see a next impulsive wave start up, and it could happen here on the ES. But that's a good demonstration of just, you know, the value of patience and not just being impulsive and jumping into a move, right? We would be break even or worse if we had tried to just grab that first impulsive move there. Gold is probably going to correct. Look how it's consolidating on the 2-minute chart. It's probably going to correct as well, just like ES did before taking off up into the next move. Well, I can't believe an hour and 10 minutes has flown by since we started this session. From here, that's what to watch for, right? Watch ES. It looks like it's getting ready maybe to head back up. I would let it put in a new high to really prove this next trend is getting going, and then there might be a good continuation of this trend right through the rest of the day, maybe even into tomorrow. Gold, I would wait for it to correct and then try and catch that move. May not happen today. We've only got hour and a half, just under an hour and a half left in the session. Of course, gold you can trade around the clock if you trade in futures, but might just let it correct and look for a long on gold tomorrow. And I showed what my outlook on the daily chart there. I think we're ready for another move up on gold, so it could be good. Okay. Well, any final questions or any other final symbols you'd like to look at? I don't know if I got to everything. It went by really, really fast. Yeah, just if I missed it, type it in again if you want to see one more stock symbol before we wrap up here, and then I'm going to go ahead and shut it down. We will send out a recording, like I said. TNA? Yeah, David, let's do it. So this is an ETF, small cap bullish shares. Small cap bull 3X. Okay. So this is a new trend, and this actually is all wave 3. It had a little bit of a correction in the middle of it, but this is all wave 3, and it's starting to pull back. So too late. You know, this is a very mature trend, so for me, it's too late to get in it and go long. Don't, you know, it could keep going, but I don't like jumping into mature trends because they can turn at any time. You have no way of knowing. Okay, so I'll be waiting for the correction to start, and it hasn't proven itself yet. So no real trade yet on TNA. Okay, TMUS for Nick. Same T-Mobile, so same thing. This is a beautiful trend, right? And we do have a way to catch when it breaks out of this channel, right? We would have been looking for an entry on this, right in this range right here. We have a way to catch this, but the trade was back here. Right now, too mature. I'm just not going to jump into it, and it's losing momentum. If you look at the oscillator, you know, it may go a little higher, but it's losing momentum. The next trade here is the correction on this, and it's not there yet either. So great, beautiful trend, but nothing happening yet. That's my take on cryptocurrencies. Is that like Bitcoin and stuff, Jarius? It's interesting to read articles about it, but I'm not doing anything financially with it. Yeah, I don't understand it well enough. I understand real money, right? I understand U.S. dollar. So yeah, it's confusing to me too. So if I don't understand it, I'm not gonna put money into it. Hey Walter, you're welcome. I'm glad you enjoyed it, man. SLW for Scott. You know, we were in that. We got stopped out in profit. It looks like we may be getting ready for wave 5 to start. We got to break up above the cloud, so our new entry on this is going to be up. We probably want to go ahead and just take out that last high. So our new entry on this is going to be up here, and we'll see where the stop would be then. But we still got a nice run up to the target up above 29.80, above 30 bucks there. So we could get another trade on SLW. It's not quite ready yet, Scott. And it corrected just like gold did, and it's probably going to move up with gold if it goes up. You're welcome. You're welcome. Did I miss any? Hey, you're welcome, Nick. For a minute, I thought that was a symbol you wanted to look at. THX. Oh, was that a symbol? You're welcome. Hey, Rajendra, thank you. I'm glad you found it valuable. NQ for Daniel. Yeah, so NQ is going to be very similar to SPY, ES right now. But let's look. So let's look at it on the 2-minute chart. Oops. I typed in MG. I was looking at it and going, why is that so different? There we go. So there's the impulsive move, just like ES. We wanted to see the correction, and we got it, just like ES. So there it is. Now we would be looking for it to put in some new highs and to you know, you could call these new highs, you know, the highest closing price, not the wick. So if you were to get above this 54.18 level, that might be an okay long entry there on NQ, Daniel. And if I did that, my initial stop on this would be under this low in this area here. Hey, you're welcome. Price of the options program. So Richard, you mean the options training course? The stock options basics course? Because I have a stock and options pick service where I publish trades. But the training course, I posted a link in the chat area. So the list price for that options course is 497 bucks, and it's a good value at that. but I'm offering a 50% discount for everybody in the room, so I'll repost that. So 247. Come on. I think I just posted it again. Looking for the hotkeys. There it is. So I just posted the options course 50% discount link again there for Richard. Derek, no need to apologize, man. And Scott says Scott's here. I'll see if I can publish his comment here. He just bought it a week or two ago. So here's his comment. Hopefully you can see that. Thumbs up from Scott on the options course. I know Scott was a little skeptical, man, but he bought it, and so I'm glad, Scott, that you found that valuable. I worked really hard to make all my products as good as possible, provide real value. Microsoft is like these others that we've looked at. You know, beautiful trend. Beautiful trend. It's just late, right? Look at the momentum coming out. So we don't want to just jump in and then have, find out, whoops, trend's over. Great, I just took a loss, right? We'd rather use tools to find the next move, whether it's a corrective move or an impulsive move, and keep coming back to this example because it's a beautiful trade of MO, right? We would not have wanted to trade it here, and that's kind of what getting into Microsoft now would be. We would wait for the correction, we take the next move, and we did that here. Got in at 67, and things up at nearly 77 bucks, and a really nice profit on that thing. So that's what we try to do. Wow, the reviews are coming in. So here's Rick as well commenting on the options course. Super. And the option trades, that's the stock and options pick service. And there's a link in the chat area. If you scroll through the chat area, there's a trial, $39 trial for 30 days, where you can go, take it for a month, see how it goes, and then there's a discounted price. It's $97 a month on an ongoing basis, discounted from the $127 on the homepage, the list price. How are we doing on our futures here? There's that entry on ES. Boom. I'm still looking at in Q, but we got it on ES. There's that entry. Sweet. So if you're interested in short-term trades, that's an entry on the S&P, whether it's the actual futures or an S&P related, ETFs. You can use SPY or one of the leveraged ones. But I think we got a nice long trade going on the ES now. Okay, well, I am going to wrap it up. We've been here an hour and almost an hour and a half. Really appreciate everybody showing up. Great questions. It's fun looking at your charts, seeing your comments. Really enjoy. I love looking at charts. I love talking to traders. This is what I do. If you run into any questions down the road, don't hesitate. Send me an email. Here's my email. There, I just typed in my email. We're a relatively small firm, and I have time to talk to customers, so I try to answer every email that comes in. So, love to hear from you. Okay, well, hey, trade safe. Use risk control. Make sure that before you go into a trade, you've figured out how much you could lose on the trade, and that's an acceptable amount. That's what I say. Use risk control. Trade safe. Keep your losers small and your winners really, really big, and that's the key to success. All right, if you'd like to join us, we'll be in business tomorrow morning in the live trading room bright and early, so love to have you there. There is a link in the chat area if you want to check that out. I'm going to go ahead and go on mute, wrap it up. I'll leave the thing going there in case you wanted to check out some of those links. But I have recorded this, and I will send a recording out to everybody that registered. So take care, and I hope to talk to you again in the future. Bye.